Happy Tuesday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Tuesday, October 10th, 2023. Let's start with our executive summary. So number one, Beijing is considering a 1 trillion yuan, which is 137 billion US dollar infrastructure package to help the Chinese economy meet its annual growth target of 5%. That would represent the largest fiscal response to China's disappointing recovery to date. Number two, China's private sector debt to GDP ratio of 227% and its debt service ratio of 21% are dramatically higher than the median of other major economies. As such, we have long been of the view that the Chinese economy would remain mired in its multi-year structural liquidity trap in the absence of fiscal stimulus. Said simply, China must expand its public sector balance sheet to engineer robust demand in its economy because the private sector is largely tapped out. And then number three, with the advent of the risk-off inflation top-down market regime and our cross-asset correction risk indicator, otherwise known as CACRI, breaking out above the consensus complacency threshold, we have much less conviction in our year-end performance chase view. The top-down market regime needs to transition back to a risk-on regime soon. Otherwise, we could be a third or a quarter of the way into a stock market crash. Transitioning to my sector, to our cross-asset performance monitor here. So we'll start with U.S. equity sectors. S&P up 2.7% week over week. What's leading the charge higher here? We got communication services up 4.1%. Also have technology up 3.9%, really enjoying that move down that we've seen in bond yields in recent days. Real estate up 3.4% as well. The only sector that's really lagging week over week is consumer staples, off 1.1%. That makes a lot of sense in the move that we've seen, the bounce that we saw in energy prices off the correction. Number two, factor performance. We got S&P, as I mentioned, up 2.7%, being dragged higher by growth, up 3.7%. High beta and high beta value, both down about 1.82%, respectively, kind of leading the laggards to the downside. That makes a lot of sense in the context of a risk-off regime. In terms of geographic performance, so we got S&P up 2.8% week over week. Brazil's having a nice bounce, up 3.6%, but it's pretty consistent across. China up 3.5%. We also got Europe up 3.4%. So anytime you see global equities leading the charge higher, that's a clear bet on global growth. That's exactly what you would expect to see if China's going to pump $137 billion into the economy in Q4. And in terms of fixed income performance, you got the core ag down or up 1.1%. First day I've been able to say up anything in terms of core ag or fixed income in quite a while here. In terms of what's leading to the upside here, you got mortgage-backed securities up 1.9%. You got TLT bouncing up 1.7% as well, currently week over week. In terms of the currency market, so dollars off a full percent week over week. This is obviously contributing to the risk-on bias that we've seen in markets really since the middle of last week. In terms of what's driving markets higher or driving the currency, what's leading the charge in the currency market, you got the Aussie dollar up 1.7%, Swiss franc up 1.7%, and as I mentioned, dollar lagging, and then commodities. So commodities down 1.4%, still flagging week over week. Crude oil is down 3.8%, leading that to the downside. To the upside, you got precious metals up 1.9%, and uranium up 1.8%. And then lastly, crypto, Bitcoin's flat week over week, but all of the cryptocurrencies are down in the 2 to 5% range week over week. So really not participating in the bounce that we're seeing really in fixed income and equities. Some of these more exciting geographies and currencies. And then lastly, we'll wrap it up with our daily rundown of cross-asset trading ranges vis-a-vis our Lombo dashboard here. The only thing that's signaling right now in terms of what's overbought, oversold is the Shanghai Composite. That number's a very narrow range here, so it's oversold. So expect that range to widen in the coming weeks. And if there's any validity to that report, because that's a Bloomberg rumor, if there's any validity to that report, then we're likely to see the Chinese equities find at least a local low here and trade higher in the coming weeks. So with that, Darius Dale wrapping up our macro minute for Tuesday, October 10th, 2023. Best of luck out there today. We'll catch you back here tomorrow. Cheers.